How do cash flow problems arise? Cash flow problems don't arise overnight. They actually happen in 5 predictable stages. For cash flow problems, most owners see it about 6 months too late, and I'm going to show you how it starts. By the end of this video, you're going to know the 5 stages of how cash flow problems arise. I was talking to a remodeler contractor one time. He said it all started so small, I didn't even know it. I paid one vendor a little too late. Then I went and got a line of credit. I wake up 3 years later, I'm in $400,000 worth of revolving debt, and I can't seem to make profit on the P&L statement. And I look at my cash accounts and really not a lot's there. This is a common recurring theme that doesn't have to be the case. We can do something different if we can understand how cash flow problems arise. So let's walk through an ARISE metric. I've got an acronym, ARISE, that'll help you to understand how these arise and what we can do to solve it. All right, the first problem that we see is we start to assume, when we look in here, that if there's money in the bank, then I must be making money. Now here's the problem. When money is all locked away into one bucket, one place, then we assume that every dollar that's in there is kind of our money at that point. And we start to make decisions without strategy. We just make decisions because there's money in the bank. And so we say to ourselves philosophically, if there's money in the bank, then I must be making money. And we assume that money in the bank means safety, but really what we're in is what I call a popcorn bucket trap. So imagine a popcorn bucket with a bunch of popcorn in it, and the popcorn represents your money. When it's all in one bucket, we think it's all ours. Instead, what we want to do is we want to subdivide that one bucket into smaller buckets all the way down, 7, 8, 9, 10 smaller buckets. Yes, actual bank accounts at your bank. And we want to take the volume of popcorn or money that's in here and start to put it in these smaller buckets by percentage, and that way we start to know instead of assuming. This is a huge red flag for anybody who feels like they're in a cash flow crunch, is we're assuming instead of knowing. And knowing, we can subdivide that out, but this takes a little bit of work to be able to do that. We don't want to be in the popcorn bucket trap. We want to know our money. And as we know our money, we've got to be aware that revenue does not grow faster than systems. And so a lot of times, if our systems can't keep up, what we do is we spend more and more and more money, and the money actually overcomes the revenue. And so when we're raging over our money, which means we need to know our revenue, our associated cost of goods sold, which equals our gross margin, that allows us to understand the expenses. Many of us take the E, the expenses, and we position it in front of the R, the revenue. Why? It's because our systems are outpacing our revenue. We're selling projects that we don't know that we can fulfill, and so we've got to spend money quickly and hastily in other areas, and that expense starts to grow. And so what we've done is we've taken more sales, which is gasoline, and we've poured it on an already out of control fire. Most people think sales solves everything. I've heard that adage so many times. The reality is what sales does is it exacerbates what already exists. So if what already exists is good, sales can make it better. If what already exists is bad, sales is going to make it worse. We've got to be super careful, not just in not assuming, but also making sure that our systems don't outpace our revenue. The third way cash flow problems arise is when we start to ignore the timing of money. So money has timing in any given business, particularly in the area of receivables and payables. So accounts receivables, accounts payables. And we should have dedicated terms to those things. But if we're lax on our terms for receiving payment, 30 days turns into 45, turns into 60, turns into 90, then we lose our options because we've lost our cash. The customer is holding the cash rather than we are, and if the customer holds the cash, we have to find it somewhere because we've got expenses that recur every month, so guess where we go? The bank, hard money lenders, we go to all these other people to get this cash rather than using cash that we should already have. So what we do is we quote, rob Peter to pay Paul. The IRS calls that stealing, by the way. Or another way to put it is we use tomorrow's deposits to pay for yesterday's bills. If you feel that, or if you're in that cycle, you have got to get out. That's how cash flow problems can arise. And if we're in that trap and then exacerbate it by skipping weekly reviews. We need to have weekly reviews in our business, but if we're skipping those weekly reviews, then we're putting ourselves in a position where we're sticking our head in the sand. Just remember this, anytime you skip a financial meeting, you are proverbially sticking your head in the sand to not knowing. If I could put one word over this entire board of the strategy that it takes to stay out of cash flow problems, it's the word to know. K-N-O-W, to know. You've got to know your numbers. You've got to rage over your numbers, not because you're obsessed over money, but it's your responsibility as the owner to make sure that there's gas in the fuel tank in order to advance the car. Did you know that that's actually what the word profit means? Professare in the Latin literally means to advance, to push a thing forward. And so we're doing this responsibly to make sure we do it forward, but whenever we skip one of these meetings, we're actually being irresponsible in the business, and it's setting us up, it's setting the soil for cash flow problems. And the final way that we get into these cash flow problems is the expenses start hiding in what we've identified as maybe about 13 different areas, and it's over here in this idea of slim pants. Now, what does that mean? We want to run a lean business. We want you to be able to fit in your slim pants. So what are those slim pants when we're looking at cost categories and expenses? Because this is a big category up here. And what influences those? You ready? Scheduling, labor cost, inventory, mistakes and warranties, and then down here, pricing, accounts receivables and payables, new equipment, taxes, and then servicing the debt. So if you just had those 9 points to be able to run those through and not hide those, but pull them up. How do you pull them up? Put them on a spreadsheet during your weekly review. Talk about those every week. Talk about your ARAP every week. Talk about your subdivided bank accounts every week. If you can begin to talk about those, expose them to the light, now we're no longer hiding behind those, but we identify, wow, these are the things that we need to pay attention to so that we rage over our numbers and know the numbers. And if you know those numbers and meet on them with repetition, predictability, and meaning, you're going to start to stave off these cash flow problems, because I don't want you to be the contractor that told me this. Hey, I found out over years I was doing a lot of revenue with a little bit of net income, and what I found out is I just built myself a job with a boss I don't like. You get what he was saying, right? He'd rather just go get a job than have to deal with all this other stuff that he's got to deal with when you own a business. Listen, your role as a business owner is weighted down with burden to not know these numbers. You need to draw benefit and ensure that you have the courage to lead the business. And in order to do that, we don't want to assume any more about this. We want to arise above these cash flow issues. We want to review our systems and make sure that those systems don't outpace the revenue of what we're doing. We want to look at our ARAP, our subdivided bank accounts. We want to make sure that these expenses are not hiding. And by doing that, we need to make sure that we stay on track with our weekly meetings. If we don't do it, we're sticking our head in the sand. Hey, I want to give you a tool that's going to be super helpful for you. If you go down to the description link below, we've got a link down there called solvecashflow.com, and we've worked really hard to build a cash flow handbook. And it's a tool that you can use to get in front of you and your team to start methodically working through ways to arise out of these cash flow problems so that you can lean back into the mission of your business that you got started with in the first place. Remember that joy that you had when you started up? I want you to recapture that joy, and part of the way that you can do that is through getting on top of your cash flow. So go to solvecashflow.com, click on the link in the description below. That handbook will be able to walk you through methodically on how you can build a great cash flow system so you can be liberated from chaos to make time for what matters most.